We have Basudeb Banerjee now joining us. He's analyst at ICICI Securities. He tracks this space. Basudeb, good morning. Thanks for joining us. Do you have coverage on iShares? That was the top gainer yesterday. So let's begin with that.
Yeah, we do have a buy on iShares.
So, what did you make of this big move yesterday? And do you think it has a structural story now from here on?
I would say nothing changed in the business yesterday or on the results. Your production scenario per month, which was at 50,000 till Q3, with a bit improvement in semiconductor supply, their average production a month improved to almost 65,000, and outlook remains similar with improving supply chain. And if you look at what has changed in last 1 month is aluminium prices have corrected from $3,500 to almost $2,800, and other metal prices have also corrected 10-15 odd percentage. So commodity reversal a bit and improving production outlook. So operating leverage improvement and gross margin improvement outlook on an improving volume. So that's why the stock recovered back yesterday post the correction in March, April.
All right, Basudeb, hi, good morning. You have a buy on Tata Motors as well, although I do understand that the company has improved their profitability quite a bit over the past many quarters, strengthened their balance sheet as well. There are still near-term challenges, right, like the supply side constraints as well as the China issues, which could impact JLR, the business. Would that not concern you?
Yeah, that point would be very much valid if their monthly production was, say, 35-40,000 units at the wholesale level. But today, you see from the numbers, they are wholesaling, what, 26,000 units a month, almost 40% lower than desirable levels because of semiconductor issues. So that deflated number already takes care of macro concerns in the near term in key target markets. So, and the good thing is that if you look at their presentation from 35-40,000 a month levels, so they are now down to almost 25,000 a month FCF breakeven. So even producing 25,000 a month, they are not incurring FCF losses. That's remarkable achievement, and that's why JLR remaining FCF positive, even selling 75-80,000 units a quarter. And in the domestic side, you know, the remarkable stuff they are doing in the passenger vehicle business, and CV is already booming and going back towards FY19 levels. So all in all, commodity reversal, gradual improvement of chip supply are the key ingredients for success of Tata Motors in next couple of years.
Fair enough. In terms of auto angs, Basudeb, what is your top pick now?
So in auto angs, I'll say that from a structural play perspective, we like Balkrishna Industries, where long-term volume compounding capability of around 10%, disciplined price hike capability, and you can look at their margin execution historically, be it 5 years, 10 years. Combining all those things, it's a steady 15-16% EBITDA compounding play with 25% ROC clean balance sheet. So we'll prefer that as a long-term play. And from a cyclical perspective, we like two areas. One is the stock which you discussed just now is Bharat Forge, where all the ingredients for cyclical revival, be it domestic CVs, be it the oil and gas segment, be it the aerospace segment. And yes, US trucks are going through a leaner patch, but it's a matter of 6 to 12 months, and they have adequate order books already to meet the 25,000 per month production target. So combining all those things, strong margin discipline, yes, Bharat Forge is a cyclical play, and we are positive on Bharat Forge is a price target of around 880 rupees.
Okay.
And other cyclical play we like is the tire space, where like Apollo tires, where demand is not an issue and margin is also stabilizing.
Okay. By the way, the pre-open has settled 70 points higher on Nifty, 200 higher on the Bank Nifty. The China news is helping commodity stocks. So Hindalco and Tata Steel are your top gainers. The rupee, by the way, has opened at a fresh low, 77.67 right now on that. So just keep an eye on that as well. Basudeb, what about the two-wheeler space? That is where at least, you know, there's some value, right? So how would you approach it?
Yeah, so one important thing, if you note, Anuj, is the retails in April and retails in first half of May are better than March levels. So the marriage season is playing out well for two-wheeler retails and bottoming out of retailing. In fact, April-May retails are slightly better than Q4 average levels. So which means we are going into the monsoon season and improving semiconductor supply with improving retails and slight reversal in commodities. So that should bode well for the two-wheeler space, which saw close to 35% decline in last 3 years cumulatively, and impact of raw materials. So both demand gradually improving, semiconductor supply improving, and key raw material basket cost reversing. So if I combine these three things, two-wheeler stocks which have been trading at dismal valuation levels and elevated dividend yield, they should see some re-rating, and that's why we upgraded Hero Motors to buy from sell post this correction as such. Though our topic in the two-wheeler space remains TVS Motors.
Okay, just one final question then before we let you go. A quick word on the tractor space, because Escorts told us that they're expecting double-digit growth in this quarter. Would you buy either Escorts or M&M?
See, 1 quarter growth doesn't matter from overall valuation scheme of things. In fact, Escorts themselves guided in the previous con calls also that outlook for full year should be somewhere around mid to high single-digit growth. And broadly, that's the kind of outlook we are getting from the market also. And if you look at the tractor retails for April and half of May, is not encouraging as such. It is more of wholesale numbers which showed significant growth, which means that during this harvesting season, a bit of stocking has happened in the market. So on April-May retails, I don't see it a big encouraging factor from an overall full year tractor market outlook to be prorating the Q1 growth for the full year per se.
Okay, Basudeb, we'll leave it there today. Thanks a lot for joining us and giving us a call on all these stocks. Like we said, the pre-open settled slightly higher.